All right. So the passage of this One Big Beautiful Bill Act is going to affect you. You've had a little while now since it passed to try and make sense of exactly how this bill is going to impact your finances. You've probably seen the big headline, a massive $6,000 tax break for seniors. And for married couples, that could be up to $12,000. But like with any of these things, buried in the hundreds of pages of this law are the critical details the headlines are just skipping over. So who actually gets this money? What are the income traps that could just wipe it out? And maybe most importantly, how do these changes create a very specific, temporary, 4-year golden window to completely rethink your Roth IRA strategy? If you ignore this, you could be leaving thousands of dollars on the table or, not gonna lie, miss the biggest retirement planning opportunity we've seen in a decade. So, this One Big Beautiful Bill Act is now the law of the land. And while you're hearing all this talk about a $6,000 tax break for seniors, the reality is, well, it's a lot more complicated. A lot of people are confused about who really qualifies and what this all means for their retirement. In this video, we're going to cut through all that noise. I'm going to show you exactly how this new law will impact your 2025 tax bill. We'll break down this new senior deduction, who gets it, and, this is the important part, how these changes open up a powerful but temporary window for your Roth IRA that you really can't afford to ignore. We have a lot to cover, so let's get right into it. Section 1. The new law of the land. What just happened? Okay, so on July 4th, 2025, this One Big Beautiful Bill Act was signed into law. And it's a game changer for one huge reason: certainty. For years, we've all been living with the Tax Cuts and Jobs Act, the TCJA, knowing that its most important parts for people like you and me were set to just disappear at the end of 2025. This created a giant question mark for anyone trying to do any kind of long-term financial planning. We were all staring down the barrel of a tax cliff where rates would snap back up and our deductions would shrink. It just got absolutely insane trying to plan. This new law basically ends that anxiety. It takes many of the individual tax cuts from the TCJA and cements them into place. They are permanent. Those lower tax brackets we've gotten used to, they're here to stay. Now, what permanent means in the context of these bills is, permanent until they pass another law. But for now, this move from temporary to permanent is the bedrock of the new financial landscape. It gives us the stability we need to make multi-year plans with some real confidence. But the law didn't just extend the old rules. It added a few new layers, and the biggest one is a brand new targeted deduction aimed right at America's seniors. And that's where we need to focus, because the details are everything. Section 2. The $6,000 senior deduction decoded. All right, this is the part that's getting all the headlines, so let's break it down piece by piece. The law creates a new tax deduction of up to $6,000 for every qualifying taxpayer who is age 65 or older. Now, let's be crystal clear about something. This is a deduction, not a credit. It just wipes out a chunk of your adjusted gross income, which then lowers your final tax bill. For a married couple filing jointly, where both spouses are 65 or older, you can each claim this, which means a combined deduction of up to $12,000. Simple enough. If only one spouse is 65, well then only that one spouse gets the $6,000 deduction. But here's the first piece of fine print, and you have to pay attention to this: the income limits. This benefit is really designed for low to middle income seniors, not the high earners. The deduction starts to phase out, meaning it gets smaller, once your modified adjusted gross income, your MAGI, hits $75,000 for a single person or $150,000 for a married couple. Then it disappears completely once your income hits $175,000 for a single person or $250,000 for a married couple. So if your income is above those top numbers, this new senior deduction won't apply to you. Now here is the part that makes this so powerful. This new $6,000 deduction stacks on top of the other deductions you already get. It's an addition, not a replacement. A lot of people are missing this. Let's look at how the math works for 2025. I'm going to need a bigger piece of paper for this. First, you've got the new increased standard deduction. For a single filer, that's now $15,750. Second, if you're 65 or older, you already get an additional standard deduction. For 2025, that amount is $2,000 for a single filer. And now third, you get to add this new $6,000 senior bonus deduction on top of all of that. So a single person over 65 who qualifies can now have a total deduction of $23,750. $15,750 plus $2,000 plus $6,000. That means the first $23,750 of your income is sitting in a 0% tax bracket. For a married couple where both are over 65, the numbers are just staggering. You get a $31,500 standard deduction, plus $1,600 each for being over 65, $3,200 total, plus the new $12,000 senior bonus. That's a total deduction of $46,700. Almost $50,000 of income can be wiped away before you pay a single dime in federal income tax. And what if you're a DIYer who itemizes deductions? More good news. The law was written to let you take this new $6,000 deduction even if you itemize. That's a rare and incredibly valuable feature. But there is one giant catch. You cannot miss this. This new senior deduction is temporary. It is only authorized for 4 tax years: 2025, 2026, 2027, and 2028. After that, it expires. This 4-year timeline isn't an accident, it's a deliberate window. And it's this window that creates the huge strategic opportunity we're going to talk about next. Section 3. Beyond the senior bonus, other major changes you must know. While the senior deduction is the star, there are a couple of other fundamental changes in this bill. First, as I mentioned, the Tax Cuts and Jobs Act individual tax rates are now permanent. The brackets of 10%, 12%, 22%, 24%, 32%, 35%, and 37% are locked in. This is huge. It means you can plan for the future without that tax cliff anxiety that rates will automatically spike in 2026. This stability is key. Second, let's talk about Social Security. There was a lot of talk, a lot of whispers, that this new law would finally make Social Security benefits tax-free. Let me be perfectly clear, that did not happen. The rules for how your Social Security benefits are taxed have not changed. You still have to do that provisional income calculation. However, that new $6,000 senior deduction provides a massive backdoor benefit. By lowering your overall taxable income so much, the deduction can, for many people, reduce or even completely eliminate the tax on your Social Security just by pulling your income below the thresholds. So it doesn't change the rule, but it absolutely changes the outcome for millions. Third, there's a great little provision for those of you who are philanthropically minded. For years, if you took the standard deduction, you got zero tax benefit for giving to charity. The new law changes that. It allows taxpayers who don't itemize to take an above-the-line deduction for cash contributions. You can deduct up to $1,000 for single filers and $2,000 for married couples. It's a great incentive for the nearly 90% of Americans who take the standard deduction. Okay, we've just covered a ton of numbers. New standard deductions, the 65-plus additions, the new senior bonus, the phase-outs. I know, it can be a lot to keep track of. So,
To help you figure out exactly how much you could save, I've put together a simple 2025 tax savings estimator. It's a free PDF download that walks you through these new deductions based on your filing status and income. It'll take you 2 minutes to fill out and give you a clear picture of your new situation. The link is right there at the top of the description. Go click that link, get your free estimator, and then come right back. Because next, we're going to talk about how to turn all these new deductions into a powerful retirement strategy. Section 4. The 2025 to 2028 Roth Conversion Golden Window. Now we get to the strategy. Knowledge is good, but action is always better. This new law has, maybe by accident, created what I'm calling the Roth Conversion Golden Window, and it lasts for exactly 4 years. Here's why. The whole game of tax planning in retirement is about controlling your taxable income. The goal is simple. Pay taxes when your rates are lowest. A Roth conversion is just when you take money from a pre-tax account, like a traditional IRA or 401k, and move it to a post-tax Roth IRA. You have to pay income tax on whatever you convert, but then that money grows completely tax-free forever. And all your qualified withdrawals in retirement are tax-free. The strategic question has always been, when is the best time to do this? And the answer is always when your tax bracket is at its lowest point. This new law just poured gasoline on that strategy. Think about it. We now have the certainty of permanently lower tax brackets, and for the next 4 years, we have these temporarily massive new deductions for seniors. It's the 1-2 punch of these two things that creates this huge opportunity. Let's go back to our example of a 65-year-old single filer. Their total deductions are now a whopping $23,750. The 12% tax bracket for a single person in 2025 goes all the way up to about $49,000 of taxable income. This means you could have total income of over $73,000, $23,750 in deductions, plus $49,000 plus in the 10-12% brackets, and still be in just the 12% tax bracket. Here is the strategy. You use that giant deduction space to do a Roth conversion. Let's say you have a pension and Social Security that add up to $50,000 a year. In the past, you wouldn't have had much room to convert before jumping into a higher bracket. But now, with a $23,750 deduction, your taxable income is only $26,250. You still have over $23,000 of room left in that 12% bracket. You could strategically convert $23,000 from your traditional IRA to your Roth IRA, pay a very manageable 12% tax on it, and get that money into the tax-free bucket forever. For a married couple with that huge $46,700 deduction, the opportunity is even bigger. You can shelter a huge chunk of your regular income and then use those low tax brackets to systematically move money from the forever taxed bucket to the never taxed again bucket. This is how you shrink your future RMDs, that tax time bomb, and create a tax-free legacy. But remember, the clock is ticking on this strategy. This strategy is supercharged by that temporary $6,000 senior deduction. That means this golden window is open from January 1st, 2025 to December 31st, 2028. After that, the window doesn't slam shut, but it gets a lot smaller. The time to build a 4-year plan is right now.
All right, so the One Big Beautiful Bill Act is a lot more than just a headline about a tax break. It's a fundamental shift in the landscape for financial planning, especially for retirees. Let's just summarize the 3 most important takeaways. First, that $6,000 senior bonus deduction is real. It stacks on top of your other deductions, and it can dramatically lower your tax bill. But remember, it's temporary and it has income limits, so you have to confirm you actually qualify. Second, the permanence of the lower TCJA tax brackets is a massive win for planning.
The anxiety of the tax cliff is gone, which gives you the clarity you need to make smart decisions for the next few years. And third, and this is the most important part, the combination of these two things creates a 4-year Roth conversion golden window from 2025 through 2028. This is your chance to move retirement savings into a tax-free environment at what could be the lowest rates you'll see in your lifetime. The tax code doesn't hand out opportunities like this very often. It's complex for sure, but understanding these new rules is the first step to taking control and making sure you aren't leaving your hard-earned money on the table for the tax man. Thanks for watching. If you got value out of this, please consider subscribing to the channel. It helps more than you know. And be sure to check out this next video on the $6,000 senior tax break is misleading millions. Are you one of them? I will see you over there.